Hey everybody, it's Will here. Welcome to the first episode of the Blockware Intelligence podcast. Today we've got a really special guest. To kick it off, we brought on CEO Mason Jappa. How you doing, man?
Hey, well, good to be on, man. Really excited to launch this new product offering and jam and talk about some hot topics in the space right now.
Yeah, absolutely. So I guess kind of as a, traditional podcast format, let's just get into some background on yourself, where you're from, how you got into Bitcoin, all that kind of thing.
Yeah, no, thanks for asking. So I grew up in St. Louis, was born in Los Angeles, actually. And we moved to St. Louis because my family business owned a wood manufacturing company. And I'll get into that, but that's actually led me to Bitcoin mining with some of the warehouses that the business had in Bridgeton, Missouri. After growing up in St. Louis, I went to college to Indiana University, go Hoosiers. Got a degree in finance and a master's degree in information system. Went down a rabbit hole of management consulting. Along the way, in 2013, I discovered Bitcoin, mainly actually through the usage of the Silk Road, which was running around IU, and had some friends that certainly dabbled. And that's where I learned about Bitcoin. And I always look back when I'm researching Bitcoin and what was the true adoption event that triggered Bitcoin to be global news and eventually growing to the masses. I really do think it was the Silk Road, but we can get into that. And love researching the Bitcoin cowboys of the early days. After management consulting, I entered some time as a lead software engineer at a risk management company. And then during that timeline in 2015, 2016, my dad had some space in a warehouse, and I started just randomly ordering Bitcoin miners with the intention to sell them. I found out during that process, it was really hard to order miners, receive the miners. You're sending, Bitcoin or Bitcoin Cash or other currency types to China, and just hoping the machine show up in a few months. So with that, we had some excess power in one of the warehouses, and I did a lot of research trying to figure out what to put in there, and I came to Bitcoin mining. So started mining and scale there. Built another mine in one of my best friend's basements. During the summer, he had a girlfriend, and the first house he purchased, we literally turned it into a mini data center. And we would laugh because his house would literally become 120 degrees during summer. He'd call me bitching about wanting to turn off the miners. I'm like, no, dude, you have to keep the miners on. I was like, go buy some air conditioners. So that clearly wasn't sustainable. And then moved that stuff to the warehouse, and then eventually managing that at a small scale, growing 50, 100 miners. I moved to my first hosting arrangement. In 2017, I founded Blockware Solutions. It's been a hell of a ride. We've grown a lot as a company. Originally, we started out being one of the largest distributors of machines in the world, and then slowly become vertically integrated in mining.
Can you just explain for listeners what vertically integrated means?
Yeah. So vertically integrated, in my opinion, is we control every facet of mining. So with that, we're distributors of the miners themselves. So we have the supply chain. We mine Bitcoin. We operate hosting facilities that for managing our own machines and placing clients' machines for hosting. We write research and leading research. So we have data and analytics that drive some of our decision making. And we have mining software. We're looking to offer insurance to our miners. And as well, we offer consulting in the space. But anyways, those main points are true vertical integration in mining, controlling the whole stack, right?
Got it. And so what are kind of some of the lessons just from a, purely just starting a business standpoint? What are some of the lessons that you learned along the way? And I guess also what are some of the biggest mistakes that you made along the way as well?
My God. It's honestly, this place is the absolute Wild West, especially if you're, starting in 2017 and you're trying to figure out how to streamline the process of ordering machines from China, them arriving to the States, and creating a credible company in between. Our first marketing pitch was we put out ads in the top 3 cities of every state on Craigslist. And one of my first mistakes was I put my phone number on those ads. So I would used to get 1,000 calls a day from the sketchiest mofos reaching out to me looking to like buy machines or interest in services or trying to sell me whatever the hell else they had to sell. And you can imagine that was the first mistake. But in general, I think with growing this company, there's many things that you learn. I think over the years you realize relationships are most valuable. Early on, we could have clients, and for us, we would see real money coming for the first time, and learning to manage the clients that we had as long-term relationships versus quick transactions was something I picked up really quickly. And then as you grow and become more ingrained with networking and relationships, you realize how important it is to keep those relationships maintained, to keep your clients happy, to keep your partners happy. And managing all of that into one is an art form of its own. But beyond that, creating an engine, hiring people, scaling a business, raising capital, writing research, creating new products like Blockware Intelligence. It all takes a lot of time and effort. And in the end, it's all about having the right team of individuals and trusting your team to deliver and orchestrate. Will, you being one of our new hires, really excited what you bring to the table, but it's like, how can I have position Will so that he can, succeed and grow, right? You're 19 years old. I can't believe that. I'm 30.
Yeah. So like, one thing I'm very curious about is like, how do you position growing a business around the cyclical nature of Bitcoin? Because, unlike most markets, you have these really dramatic bull markets and bear markets. And how do you kind of, manage, your risk, but also just like from an operational standpoint from those, very dramatic swings?
Yeah, so mining is extremely cyclistic, just like Bitcoin is, right? It's all built around these 4-year halving events. But in between the halvings, you have all these micro and macro events that take place. A recent one that you can look to is like the Chinese exodus, right? No one in their models entering the year was expecting 55% of global hash rate to come off at a time. So I think it's important first and foremost to be extremely agile, right? Prepare for an event to take place, whether it's a Bitcoin drop, a hash rate drop, and have capital ready so that you can arbitrage those opportunities. I think it's really important to have analytics and be able to somewhat, have a grip on forecasting. And that drives you to, where do you get that data? So possessing the data, putting the data to work, talking to individuals, sharpening your axes as much as possible on the analytics front so that you can make calculated decisions. So with that, each year the halving coming to miners, essentially your revenue is cut in half. But during this cycle, for example, entering it, we knew there was something special, right? We identified this quickly as a super cycle, and we circled this and said this cycle will be one of the best cycles in the history of mining to deploy as much capital as possible. So that was our goal entering this. But with that, in this cycle, you have bull markets, you have bear markets. With mining, you want to make sure you don't overextend, right? Don't overextend your capital into machines without having the OpEx to cover an event where margins could be constrained and profitability could go down. Make sure you're not locking yourself in a bull market into high energy rate hosting contracts, right? 90% of cost in mining is the cost of your energy. So you just need to manage your all-in energy costs, and then you can map that to a Bitcoin break-even cost. And then as you hit a stride of a bear market, just managing your expectations, becoming lean and mean, and don't be a capitulator, right? Always have enough capital so that you can keep your operation running for several years. You need to look several years out, and you want to be positioned to have capital when you need it. So for us, we had capital to buy machines and buy distressed assets when the Chinese capitulated. Not everyone did. Everyone raced to raise money, and maybe they missed some of the best price arrangements possible on buying those distressed assets. And that still exists. There's still excess supply, and we saw scarcity prior to that. Anyways, that was a long-winded answer. I think it's all about having data, understanding analytics, having financing in place, and being agile and quick moving during these market events. Because Bitcoin, in the end, is highly volatile, and mining can be highly volatile, as we've seen with the Exodus. So you just want to position yourself accordingly to adjust when these events take place.
Got it. And I kind of want to pivot the conversation to what are your thoughts on some of the recent events with mining? Obviously, the Chinese migration, as you touched on, has been a huge talking point throughout the year. What are you seeing in terms of, hash rate perhaps migrating to North America, slowly coming back online, that kind of thing?
Yeah, so I've been a proponent for decentralizing the network for a very long time. We've been writing about let's bring hash rate to North America. for several years. And we want to bring Bitcoin in the hands of Americans and our friends in Canada, and we want to bring hash rate in the hands of our friends in Bitcoin in Canada, or USA and Canada. So with that, what I'm seeing is, I believe 50% of hash rate is migrated to the United States. Prior to the exodus, we could map the futures orders, right? So now we've had more visibility on future hash rate entering the marketplace with these public companies announcing massive purchases. And for us, we can relatively have a grip on supply. How many machines can Bitmain make? How many machines can WhatsMiner make? How many machines can other manufacturers make, right? And you could take that supply, map it to the orders taking place, and then you can map where those orders are heading. Like, are they heading to Riot? Are they heading to Marathon? Or are they heading to .8? And then you can understand, where the hash rate's heading. So prior to the movement, I think the USA was poised to capture a lot of the future growth in hash rate, just mapping the orders. But then this exodus takes place, right? Where does everyone head? I would say, 60% of the Chinese miners, more or less, moved to the United States or are moving here. They're building, they found and partner with hosting facilities. They're desperately, seeking hosting and coming to companies like us. So with that, I think we're going to see a shift, a paradigm shift of the Chinese being in control of hash rate and Bitcoin and in crypto in general, from an infrastructure perspective, right? Infrastructure and proof of work as miners, to now it's shifting hands to the United States. So I think in the future, we're going to have over 50% of total hash rate. And with that, a lot of the supply of Bitcoin is going to enter us. And I'm really excited about that. So with that, we'll see some new products that come out. We'll see some new companies emerge. It's kind of like the global space race, right? You see these public companies and SPACs and reverse mergers. We're seeing more saturation than ever. And then each company is going to have to find this edge to be competitive in the future. But during a super cycle like this, if Bitcoin price continues to outplay its difficulty, then everyone's going to be profitable. And I think everyone's going to be eating this cycle in general.
Sure. And what are your thoughts on kind of the regulatory stance that the US has taken on Bitcoin? Do you see it as friendly?
Man, that's the $1 million question. We've had a lot of people reaching out to us. So you can unpack it. Like the infrastructure bill, you have some clout as far as, how do you classify a broker? And then it, is a miner a broker, right? The problem is miners can't comply with the regulations that the bill passed. They can't feasibly comply. The only people positioned to comply with the regulations that were potentially pushed out in that bill, which we're still seeking clarity on, is the only people that can possibly hit those requirements are the exchanges, right? The Coinbases, the Geminis. They have millions, if not $1 billion invested in regulatory arms, and they have the teams, the human capital, and the proficiency to hit those bills. Miners are, we cannot possibly keep up with those regulations. So I do think miners will be excluded, and I do think that will be clarified. On the second hand as well, you have, the energy, the ESG narratives that are coming out, right? Is Bitcoin mining bad for the environment? And my answer is a firm no. I don't think it's fair that miners should have to be concerned about where their energy comes from. But in general, I do think miners are aware and they're willing to comply. And I think some of the positioning that some of these policy groups are taking is you're looking at the wrong people, right? We're less than 0.5% of the global energy usage. Probably even less than that, as of recent statistics. And miners are more likely than not, over 50% sustainable energy, because naturally we flock to non-rival or excess supply energy. How do you classify that? It's going to be otherwise wasted. We flock to renewable energy because it's the cheapest. We run around and look for the cheapest energy, right? And naturally that's renewable, that's excess supply, non-rival energy. And some of that would be mixed grid energy, right? How do you define what's in a grid? That's on the energy companies. There's a million different things we talk about as far as miners being, good for the environment and good for infrastructure. But back to that point, I think they're looking in the wrong place. Banks are net, probably less than 5% sustainable energy, with all the energy use cases of keeping that centralized financial system in place. Lithium batteries are net 0% renewable energy. Tesla is 12% sustainable energy, and they're big Bitcoin critics. Look at where parts are manufactured across the world. Look at the slave labor that's used to make those parts. Look at the energy that's used by those manufacturers to make those parts. Look at the coal companies, look at all of the different public entities that exist. And they're looking at Bitcoin miners as having negative influence on energy utilization, when in fact, we're truly not. And we're doing our best to comply, we're highly aware, and we're proving ourselves out. And it's all going to be data. I think we're going to get the data. We're going to prove that we're highly sustainable, from large entities, and hopefully we can put that narrative to rest.
Got it. And like, how do you kind of see the game theory, if you will, of kind of miner adoption around the world playing out, and kind of like what factors do you think influence like where hash migrates over time?
Yeah, it's total game theory, right? A lot of it now is, so it's cheap energy, right? So if you can find a country or a unique province that has low cost energy, that hydro is great, that is potentially sustainable, great, and deploying those locations. But a lot of it also comes down to stability these days. So I've always said you need the perfect cocktail, when seeking to deploy your miners in a specific location, of good politics, a good energy cost, a good team and infrastructure, a good stabilized energy source, whether you're pulling from a stabilized grid, or you're behind meter, or you are also partnered with some type of entity that is in power generation. So with that, you need those different factors to ensure you have the right location. With what we've seen with China, we see how important it is to have good political support with your miners, right? So the Chinese were devastated. I would estimate that 30 to 40% of Chinese miners just threw up their hands and permanently capitulated. They sold off all their infrastructure. They're still selling off their miners, and they exited the mining game. Then you saw a resilience of 60 or so percent of the Chinese that are relocating and figuring it out. And I think they're relocating to, Kazakhstan, to provinces of Canada, to Norway, to Sweden, to Switzerland, to air, or even to Russia, to different locations that have cheap power, and a lot to America, right, where there's political stability, and you really hit the head on every one of those cocktails. Something that people forget about as well is in North America, we have the most liquid market as it pertains to the miner market, right? Here you can sell machines within one day to somebody else in North America. There's complexities with selling machines in Russia and Kazakhstan and China, right? People do not pay a premium for machines in Kazakhstan. Just the sound of it, it sounds like from a purchaser or buyer standpoint, if you're in the United States, it sounds like it's not going to be a smooth process. Whereas, machines here will sell for a higher premium. You have more buyers here. So you can think about machine liquidity as being a factor as well, right? So with that, I think all fingers are pointing towards people deploying in North America. It has all the cocktail, it has the best machine liquidity, and it's where you'll see the most growth with proficiency. And something that I left out too, that I think is probably the most important factor in mining right now, is access to financing and access to the capital markets. You've seen the playbooks of Mara and Riot, right? They wrote the playbooks as far as going public with their billion-dollar valuations and access to debt, cheap capital. You've seen the playbooks of Michael Saylor, right? He's writing 500 million junk bonds. I've had a couple great calls with him. He works for 10 hours that day. He said he makes $50 million an hour to raise capital for a junk bond, and then goes and buys Bitcoin, right? MicroStrategy just turned into a Bitcoin ETF. We can unpack a little bit more about the public markets. I think it'd be good. But anyways, so access to capital in a capital intensive business like mining is so important. And I think part of the companies that are going to succeed the most are those that have access to that capital and pull off the largest financing without giving away too much equity and sinking their ship.
Got it. And like, what do you kind of see as like the biggest, I guess, like existential risks to Bitcoin miners? Aside from, I guess, like, just regulation is probably the most obvious one there.
Yeah, so I mean, first off, it could, if let's say United States, it's politics, right? The United States bans Bitcoin or mining, then everyone here is fucked. But with that, miners are pretty resilient. The Chinese prove that you can, be rug pulled and relocate, in relatively quick timeline. I know some Chinese that, exerted the most resilience in the fact that they moved like a 20 megawatt operation to the States within 1 month. That's amazing. I love seeing that. And I think that was the largest technological migration that will take place in this century or in our lifetime. moving all that infrastructure and machines, from around the world. But with that as well, I think energy access, right? Accessing this cheap energy. If you look across the states and globally, energy as a commodity is going up in price because as humans, as a race, innovate and grow more corporations and entities, the energy requirements are going up. So we need to, have market share of energy because Bitcoin mining is a monetized energy at its finest. So that, not having that energy access and getting those long-term lease and making the right partnerships for miners is extremely crucial. I think access to financing is an existential risk, right? A lot of these traditional institutions, first off, they can't hold Bitcoin in their balance sheet. Secondly, they don't understand this industry. So when you're a Bitcoin miner and you're looking for loans or collateralizing your mining rigs or infrastructure, it's really hard for you to pull that off. It could take you many months. I've experienced it myself. We've gotten financing. It could take us up to 6 months. And some of the rates that you get can be upwards of 30%. They're robbing us. So getting access to that low cost capital and proving out that we're a non-risky industry, I think is something that's taking place now. And I think we're seeing a lot of traditional financiers, help out. But, that's a risk of its own. If we don't have capital, then we have to sell off our Bitcoin. And with that, of course, there's always the risk of a bear market, right? If a bear market takes place, it's not always going to be glory days and good times like it is now. You've got to, become lean and mean and prepare for it. Your margins will be compressed, right? These at-home miners that are, mining in their basements are going to be the first ones off the networks. And the oldest miners, the highest energy rates. You need to be prepped for that. And then, we're battling. I think another risk, we can close this topic, is we are using resources aside from energy that are being used around the world in different use cases that in some cases, you could argue are more important. Like we're battling for the same chips that Google and IBM and Microsoft are battling for electric cars, we're battling with Elon Musk for the chips that he uses for SpaceX, right? Or for artificial intelligence. So we are fighting for those same chip supplies from, the Samsungs, the TSMCs, and the same chips on the other altcoin mining, such as NVIDIA and AMD graphic cards. So with that, having access to that supply, and now supply constraints in mining have always been prevalent. We're just not seeing supply constraints right now with the Chinese capitulation. So with that, having access as well to that infrastructure. If you remember earlier in this year, Biden passed an infrastructure bill, which was, put a lot of money towards building infrastructure in the States, having access to transformers, switch gears, network gear, to all the energy infrastructure. We're battling other companies and entities for that same resources. So I think access to resources is an existential risk.
Got it. And when you kind of, think forward, call it, 10, 15 years, I know that's like, millennia in Bitcoin terms. How do you see yourself kind of pivoting the company moving forward and just other Bitcoin miners in general? How can they kind of leverage their position as a Bitcoin miner to kind of pivot for new opportunities into the future?
Great question. So I think the future of mining is, in its essence, as supply continues to dwindle, right? You're going to see supply shock, which we have Will DeShill as the expert on, right? But then we also have we're going to be living off transaction fees in the future, right? So it's just preparing for when supply, goes down to 3.x per reward in the next halving, and then down from there to 1.6x per block reward, and then down to 0.8x block reward. And then so it's going to continue to go down. And then, we're going to be living off of transaction fees in that future, right? We're going to be paid for our participation of validating network transactions. So with that, I think transaction fees are going to go up. And I think the US fiat value of Bitcoin is going to go up and justify that, in 20, 30, 40 years, or in the year of 2140, when all Bitcoin supply is mined, will make it worthwhile for miners so that we're still in existence. But with that, when you hit those levels, it's going to become more and more competitive. So those that have the highest edges, whether it's free energy or best software, best team, et cetera, are going to win. We're going to see the biggest and baddest miners continue to thrive and exist. So, at some point you have to prepare for that. And then what miners need to do is just position themselves, right? We're controlling energy, which is an amazing asset. You can do a million different things with energy, having different use cases for that energy. And my belief is mining will be around for, a very long time. I'm not too worried about it. But as well, you can, position a company in different sectors. For us, we're also infrastructure in proof of stake, right? We run masternodes, validator nodes, staking nodes, inserting yourself as infrastructure in other areas, leveraging your competencies and things you've learned within generalized blockchain and innovating use cases, right? Replacing these legacy centralized banks. that is a use case of mining. I think miners, as preparing for the future, should think about what they should do with their Bitcoin, right? In theory, you should never have to sell your Bitcoin. You should be able to collateralize it, or hedge it, and get financing on your Bitcoin so you can just live off it forever. But I do think, miners, when they're mining at these scales, and other network participants, whether it's exchange or the everyday person that got into Bitcoin at some point, they're going to be the banks of the future, right? They're going to be holding a scarce, extremely valuable asset that they can lend out. They're going to be the banks of the future. So you need to hodl and accumulate as much Bitcoin as possible. Hold the strong hands, don't capitulate, because that asset that you're holding on is going to be extremely valuable. And there's a lot of other blockchain, assets will be extremely valuable. And you need to think about how you're going to leverage those and make sure you're not a capitulator.
Got it. And then one kind of last question on mining. What are some of the mistakes that, you've made over the years, and as well watched other mining companies make over the years, that you've learned from and kind of have, helped you shape, your business strategy moving forward?
Yeah, it's a great question. I think first and foremost, it's timelines, right? I've learned over the years to not promise aggressive timelines, and to be conservative. Understanding, there's global logistics delays, there's delays by manufacturers, there's delays in hosting infrastructure. Telling a client that you're going to hit a certain timeline and then delay takes place doesn't help you. You need to, have your clients and partners and et cetera, be aware of what could take place, give conservative timelines on deployments or machine orders showing up. And that way you don't get in trouble when the event does take place. And we've been through a million different experiences of learning that. So going forward, it's something we certainly look to improve on. Not overextending in bull cycles, putting me in a bad position for a bear cycle, right? Not overextending in infrastructure and capital deployment. I make sure to have a strong balance sheet so that I can survive. And we've survived since 2017, right? Many bear and bull markets. I've seen 80% of hosting facilities that I once knew in 2017 are gone. Or even dating back to 2015. I've seen 80% of miners that try to set up their own shops, blew out. You saw hundreds of hedge funds over leverage their positions and blow out. I think there's some crazy stats you could read about these funds that just overextended and died. So don't overextend. Be a good actor within the space. And being a good actor is important. There's tons of scammers. We've been scammed. You have to be careful. You have to validate who you're transacting with. That's one thing about blockchain that can be scary if you're committing millions of dollars. You need to know who you're committing that money to when you're sending an asset that cannot be recovered. And you need to make sure you're receiving the goods. And with that as well, securing your assets, right? We wrote a piece, many years ago about how to properly secure your digital assets, cold storage, right? Storing that passphrase accordingly. The last thing you want is to be hacked and to lose everything that you've built. So just be careful and promise the right timelines as a miner, and you'll be in a good position.
Do you have any thoughts on the use of derivatives to kind of manage risk for miners?
Oh man, I have a lot of thoughts, and I don't think many are doing it right. So you should be hedging you could hedge your Bitcoin that comes in accordingly so that you're not getting murdered during downslides, and you could actually win during bear markets. But I just don't think there's enough sophisticated shops around on the mining front that truly understand derivatives and how important it can be for them to truly mitigate their risk, right? And that's a risk of a bear market in theory. But with, like I said, moving backwards with the Bitcoin financing that is available, lending out your Bitcoin, receiving back yield and fiat, you shouldn't have to liquidate your Bitcoin. Derivatives is another way that can hedge you having to liquidate your Bitcoin. But with that, I think there's some extremely sharp shops out there that are doing really well of hedging different cryptos. I think this is an area where you see the ability to capture a high delta and the ability to capture fragmentation. You can even find large variances and discrepancies amongst exchange pricing of Bitcoin and other assets. So how do you capture those variances and fragments and opportunities? And many people are the most advanced traders are certainly leveraging it. I think miners can leverage it more, and there's some large entities and shops out there that are certainly doing it. I don't want derivatives to go in the hands of the centralized institutions, so we need to step it up a little bit there.
Yeah, makes sense. What are your kind of thoughts pivoting away from mining, just about general market, structure and kind of your expectations from here into the end of the year. There's a lot of chatter about, some excitement into Q4. So just curious, do you share that same sentiment?
Yeah, I'm super bullish. I've been bullish since this last halving. That I knew this cycle was going to be one of the best. But from what our analytics and research are showing, I expect a big second half of the year. You're starting seeing equities, in general recover. Bitcoin mining equities and Bitcoin exposed equities are certainly booming. I love being on the podcast today with Bitcoin, breaking 51K this morning. It's a good time, good time to see green. Everyone loves seeing green. I think, NFTs are booming. You'll see some heads turn right there. You see million pieces selling for millions of dollars, and a lot of people, seem to try to be selling their NFTs when, Ethereum or whatever their NFT is pegged against, moonshots, right? Like, is my NFT really worth 10 ETH? Maybe when ETH was worth 2,000, but now it's worth 4,000. Some people are like, how do you value that, right? Is it stably pegged against the underlying, or is it pegged in fiat? I think capital is cheap right now. So, and everyone is making a lot of money. So you're just seeing people buy things, right? Used cars are worth more than they were since I can remember, right? It's a weird stigma where you can buy a new car, you drive off the lot, it's worth more. It's crazy. And that's a peg against inflation, right? When you have hyperinflation, every asset is going to widely go up in value, tracking like the CPI index and cost of living, all that's moonshotting. Everyone has more money. It's kind of just thrown around like monopoly money at different assets. But it's interesting to see that, and just try to accumulate as much Bitcoin, for example, right? During times like these, 'cause that's the hard money, and fiat's going to net negative zero. I love the US dollar Bitcoin chart, right? The US fiat against Bitcoin is it's going to go to net zero, but it's just been a downward trend for so long. What are your thoughts, Will?
Yeah, so I don't know, on a similar note, one of my favorite charts was put out by Raoul Paul. He did this macro analysis video. I forget what it was called. But anyway, so he compared all major asset classes to the Fed balance sheet. And I thought this was really interesting because when you look at, stocks, real estate, I mean, I think equities are up like 10, don't quote me on this, like 10% from 2008. Like, my point is just very minimal when you compare it to the Fed balance sheet. But when you measure Bitcoin against the Fed balance sheet, it completely sticks out. It's the one that, is not, barely getting by in comparison. So I think it just is a testament to the insane asset inflation that we've had. And I think this morning, the jobs report was kind of a signal that tapering is probably not going to come till the end of the year. I think that's part of why we saw this price action this morning. And yeah, I think we're set up for a good remainder of the year. Anecdotally, hearing from some people about some chatter from perhaps some buyers that bought in the low 30s to 40s, and then also seeing on chain just a complete reflection of that, right? Like, you're hearing anecdotally people are buying. I'm seeing on chain we have insane record levels of accumulation, and so I think all those things are kind of aligning for some fireworks into the remainder of the year. What are your thoughts on the whole super cycle theory? Do you think we stick to the 4-year cycle? Do you think we detach from it? I personally think, when you look at miner selling pressure relative to the market, 900 Bitcoin is nothing. That's not going to impact the market at all. And so do you think we can continue to kind of evolve around these miner halving cycles?
That's a great point. I think we will defer from the cycle in years to come. We wrote a really nice report around the last halving, where we looked at miner sell pressure. At those points, I do believe miners were the largest sell pressure of the network. And I think that's slowly changing, right? When you see the action that takes place amongst the large accumulators and exchanges, you have all this, fluff action, right? Where it's exchange trades and volatility that can pump this up. But if you can segment that away, I think you see sell pressure in different areas. I don't think miners will always be the largest sell pressure of the network. And I think that's a trend that's heading downwards especially as capital becomes more attractive for miners where they don't have to sell their Bitcoin. And I think institutions and the largest participants are seeing that as well. But you still have a flourishing OTC DEX and all these, massive transactions that are taking place off chain that are quite interesting. How do you track those? But I do think, scarcity and supply shock are super prevalent. And I think, I'm really interested to see what takes place in the next halving. I mean, we could see some of the largest movements in history. These 1,000, 2,000, 5,000 movements that happen, could be nothing compared to what we see in the future. So, I'm expecting some wild times. But in general, I agree with you, and I see, miners in the future will control a lot of the incoming supply. But think about it, over 18 million of the 21 million coins are already mined, and many of those have been transaction outside of miners' hands. So one could argue that miners are not the ones that are holding, the majority of the Bitcoin that exists.
Yeah, and like two kind of forms of sell pressure that I think people don't think about a lot is like just from the exchanges, right? They're taking fees on every transaction, selling that onto the open market. I think it's good to see Coinbase pledging to take 10% of their profits and put that back into Bitcoin, which is obviously coming from transfer volume and the fee that they're taking from that. And then also as we get an ETF, right? Like if they're taking a 1% fee or whatever, the larger the ETF gets, the larger the sell pressure that's going to be onto the open market as well. So yeah, I think like the main forms of sell pressure, if you will, are going to drift further away from miners. And also just like, as you touched on, they have access to the capital markets now. They don't have to sell their Bitcoin. And that's reflected in the on-chain data as well that I look at. You see, miners, sold when we ran up to, whatever 40K initially in February. But, overall, when you kind of plot it out over time, you see this very distinct change in the behavior of, kind of a accumulation from miners that they're now just, buying coins and they're just kind of sitting on their hands. So, I think we kind of veer away from the 4-year cycle. Some of the stuff I look at is telling that when you look at like, once again, the like hodling or accumulation behavior, whatever you want to call it. We like when you look at something I call the liquid supply ratio, and you plot it out since Bitcoin's origin, you see we've been in this like descending channel basically. So over time, like more and more supplies become liquid as Bitcoin's become more speculative, I guess. But what you've seen since COVID is actually a change in this, where we've the ratio is actually broken above this descending channel that we've been in. And so to me, that's really interesting because it's like, you have for the first time a change in trend. And I think that's kind of a reflection of perhaps people kind of seeking out Bitcoin as like an inflation hedge.
Yeah, 100%. I think that's a narrative that was pushed out during COVID when we saw the market crash more than ever. And you saw, legendary traders like Paul Tudor Jones and Stanley Druckenmiller and even George Soros opening up a trading desk. They saw their pitches is Bitcoin is a counter against inflation. And then you see in the grapevine, some massive institutions that are accumulating, right? Massive insurance companies, pension funds, companies like MicroStrategy, companies like, some BlackRock and some of the largest managers are buying Bitcoin mining stocks and Bitcoin exposed stocks to get exposure. I think and I'm sure you'll agree with me, I think there's a large number of institutions that have accumulated, that haven't announced it yet strategically. And it's just like, we can talk about, what are the events that really will make Bitcoin moonshot, right? One of those is more announcements from, public institutions, purchasing. And I think those will come. You mentioned one earlier, an ETF, being approved in the United States. You already have Canadian ETFs, and you see, I was just looking at something, the long list of ETFs approval, Gemini being the first to apply for an ETF in 2013, woefully denied. But there's a lot that are pending approval and will be approved. I think you're going to see more countries adoption, right? El Salvador's legal tender, they're the first, they're the trailblazers there. You're going to see more countries, adopting. And then another statistic that I'm sure, you're tracking too well, looking at network utilization, right? How many wallet addresses are out there? How many large wallet addresses are out there? What's the overall network activity, the trading volumes? Everything's points in the direction of up. That's certainly an indicator that Bitcoin is being widely adopted. And with more adoption becomes more demand. And with scarcity, you run into supply shock.
Yeah, I'm not sure if you're familiar with Mike Alfred. He spent some
Yep.
time at NID. Okay. He made a really good point to me the other day. He's like, look, Will, all these people that have been buying, they're not going to come, they're all humans, right? They're not going to come out and say that they bought until it looks, smart for them to announce that they bought. And that kind of resonated with me. And like, I so obvious, but I never, I guess, thought of it that way. But I think he makes a good point that, as we kind of move towards new all-time highs, you'll probably start to get people kind of poke their neck out and be like, oh yeah, we accumulated some down in the low 30Ks. Of course we did, right? But they're not going to say that when we're at 35K and we're down 50% on the year.
Yeah, I mean, to counter that point, I mean, some of these entities have a fiduciary responsibility to shareholders to announce said things. With that being said, I would be shocked to know, and not, I in general I agree with you, but it'll be interesting to see, man. I mean, I think that's human psychology at its finest. And I always say, mining is not immune to human psychology. Bitcoin, trading and accumulation is not immune to human psychology. It's nice for some people to take, a gain from purchasing Bitcoin at 10,000 and selling at 50,000. Can you fault that person for making that sell? For some people, it's life-changing money, right? You have everyday people participating, but the strongest hands will win in the long run, especially when we're, trading the world's most valuable asset.
Yeah, absolutely. So I guess, do you have any final closing thoughts in terms of anything you've got on your mind about the market or mining or just anything in general?
Yeah, I mean, just looking at it, it's just been such a growth. When I really entered the sector, there was only a few major players. There was like 10 people I knew that mined. Just seeing the wide adoption and the interest has been fascinating. We have hundreds of people that reach out to us a week looking to enter mining or participate, or power companies looking to enter and scale, institutions looking to get exposure and the creative ways they spin up to get exposure. It is amazing. The global interest in blockchain and Bitcoin and cryptocurrency in general, it's like the gold rush of modern time, and everyone is wanting to participate. I don't think it's like the internet, bust that took place or the bubble, right? Everyone wanted in the internet in the 90s and early 2000s, but look what emerged, right? You have Amazons, you have companies like that emerge, and Google's, right? That are pillars, and they are the blue chip stocks of the modern day. And I think we'll see that, but I don't think there's going to be as much of a bubble that pops here. I think this is here to stay. It's proven out its existence. I do think there's a lot of projects out there that will not make it. I still stand by my standpoint of, I don't think 90% of the companies that exist right now in blockchain are going to be around in 30 plus years, right? Like, there's all these people that do this and that, but they're going to get margin compressed and blown out. It's going to be a game of the smartest and the best positioned, and those that have access to the best capital and the best teams are going to be the ones that thrive in all sectors of this industry. In general, remain super bullish. Really pumped about Blockware Intelligence. We'll probably talk about some of the stuff we're going to do here, right?
Yeah, man, I'm stoked. So after you, we've got next week, this guy, he's pseudonymous, but he goes by John Wick. He's a options trader. So he'll be coming on talking to people about options and technical analysis. And then the next 2 weeks, we've got Checkmate coming on, and then David Puel, who are two of like my big influences from an on-chain perspective. So I'm hoping to, just have some really smart people on and just learn a lot, and hopefully the audience learns as well. So I'm looking forward to this podcast. And then also, of course, we're doing the newsletter, which has been crushing it lately. And then we've also started these weekly kind of like newsletter videos where I'm basically just doing like a verbal overview of the newsletter and kind of talking through things in a little bit more depth. But yeah, I'm really excited, and I think we're building a rocket ship here, and it's been whatever 2.5 weeks now, but I'm really excited to be here at Blockware.
Yeah, man, really happy to have you. And just on the intelligence fronts, definitely go to subscribe to our newsletter and blockware-intelligence.com. If you don't, we're revamping the website. We're gonna post all the podcasts and YouTube channel videos there. We're going to aggregate and put a research arm there aside from the newsletters. we're going to build some really nice analytics and dashboards and other information to essentially become like a resource and intelligence hub for Bitcoin and mining and Bitcoin equities analysis, and likely into a few other areas. I think we can apply some of the on-chain analysis that you do well into other areas, and certainly we're going to do that in mining. But essentially, we want to put out data and arm the people with intelligence, right? The most valuable asset you can have in the world is intelligence and data and analytics. That's if you have the right data and analytics and intelligence, you can make some massive winning trades. You can forecast well, you can predict the future in some ways, shape, or forms. No one actually can do that, but some of the the best trading shops in the world have that information. So really pumped about what we're doing here, and it was great being on with you. We got a lot of exciting stuff to come, man.
Yeah, absolutely. So I guess one last final question is a fun one. What's your you can give a range here if you want to cop out a little bit. What's your price prediction end of year?
Man, it was funny when I was on with Pomp at the beginning of the year, and we were looking at statistics. Like the year after the halving is Bitcoin's best performance year, and the average return was like 3,500%. So you could have argued like Bitcoin 700,000, no way. But I'm gonna go 100 to 150,000, maybe meet in the middle at 125. December 31. Last year I predicted Bitcoin ending price at 35K, so I wasn't too far off. We'll see how I land there. Where are you at?
Nice. Yeah, I've got a model that I kind of am basing this off of, and it's based off of like an all-time moving average of Bitcoin, and so it's sloping upward. Right now, it's right around like 96K, and so my prediction is actually 125K. Like that's not just I'm not just saying that because you said it, but so it's interesting that's your prediction as well. We'll see where the model's kind of sloping up to towards the end of the year. If price starts ripping, then it might slope up to like 150. But as right now, it's chilling right around 100K. So yeah, I think at least we can say conservatively probably six-figure Bitcoin by end of year.
Nah, yeah, man, I agree. And that was completely coincidental for the people out there. We did not discuss this prior, but us old dogs, 30-year-old guys, have a couple models and tricks up their sleeve too, like the young hotshot Will at 19.
Yeah, well, thanks so much for coming on, Mason. This is a blast, man, and hopefully you come on sometime soon.
Yeah, be on again soon. Well, really, really fun kicking this off, and look forward to hear some feedback. Thanks, Will. Later.
See you, man.
Bye.